Hi there, and welcome to Workamajig's multi-currency feature. The purpose of this video is to show ease of system setup for using multiple currencies and then the automated tracking of currency exchange rates thereafter. Setup begins in the area of general ledger settings and tracking options. The first thing to do once the multi-currency tracking feature is enabled is to designate a home currency, in this case, US dollars. Foreign currencies are added by selecting from a list of options, and the Canadian dollar is already selected here for use as a foreign currency. The system is defaulted to automatically download exchange rates daily, and then those are kept on record for historical reference. There is the option to block the daily download. However, we discourage blocking this. We do recommend that you allow the system to download those rates daily to give you accurate rates on a daily basis, thereby giving you accuracy in realized gains and losses. So the automation of this eliminates the need to have to set the rate on each transaction. But the system does offer flexibility in that rates can be edited on transactions, whether they're automatically downloaded or not. There needs to be a defaulted general ledger account for posting the actual realized gains and losses. The gains and losses occur when exchange rates are different on invoice and payment dates for both accounts receivable and accounts payable transactions. And then there's also a rounding adjustment account that's going to be needed too, because exchange rates have 4 digits to the right of the decimal point and currency only has 2 digits to the right of the decimal point. Each foreign currency also needs to have its own general ledger account for accounts receivable, accounts payable, and any credit cards in a foreign currency. For example, home currency accounts receivable and Canadian dollars accounts receivable, and then separate general ledger bank accounts are also set up according to your needs. Company records can have defaulted foreign currencies that apply. A Canadian client company record has the default currency set to the Canadian dollar, and then the client details for billing purposes has the company record defaulted to the Canadian accounts receivable general ledger account too. So that way, whenever a new project is created for this client, it will inherit the default currency and accounts receivable account from this company record. And the same applies to vendors. A Canadian vendor default currency set to the Canadian dollar, and purchasing defaults for the vendor details then has the defaulted Canadian accounts payable general ledger account set on the company record too. Now, only the company records that are going to require foreign currency transactions are going to need to have the defaults applied. Otherwise, when left blank, the company record and all transactions for the company assumes that they're going to be in the home currency. A project's settings in the area of accounting is where the foreign currency, if any, is going to be displayed. Only foreign currency is going to be displayed on the project when it's applied. When this is blank, it means that it's a home currency project. So if there is no reference to or display of a foreign currency on any record or transaction, it means home currency. And then the currency field does actually get locked down once financial transactions are applied to the project. A financial transaction, such as a client invoice, will show if there is an exchange rate to home currency. So this is a Canadian project billing dated April 10th, and the rate of exchange on that date was 0.7167, and that's the 4-digit rate that needs to be rounded to 2 digits and then gets posted to the system defaulted rounding adjustment account. The posting details of the of the invoice is going to show the general ledger impact. We have the defaulted accounts receivable, the Canadian accounts receivable here, and an offset entry for revenue. And both of those lines display the exchange rate to home currency. The accounts receivable on this particular invoice has already been satisfied by a payment. And the applied payment receipt can be drilled into from the invoice. We do have audit trails throughout the entire system. Those audit trails are going to be present and accessible throughout your process. So here in the payment record, it also shows reference to the invoice or invoices that it was applied to. And then the posting details of the receipt dated April 17th, the foreign currency bank account has the debit entry as an increase to cash, and the bank account line displays the exchange rate to the home currency as of the receipt date. And then the offsetting entry is to the foreign currency accounts receivable account, and the accounts receivable line here shows what the exchange rate was on the date of the invoice. Now, as exchange rates fluctuate from invoice date to payment date, the difference gets posted to the defaulted general ledger account for realized gains and losses. So this final entry here balances out the general ledger posting for this transaction as it relates to the tracking of multi-currency exchange rates. And then the same tracking principles are going to apply on the purchasing and payables side of things. A Canadian vendor invoice. Here we have one dated April 13th, and that shows the exchange rate to the home currency on that date being 0.7173. And this invoice has been paid, and the audit trail behind that goes like this. In the posting details of the payment is going to be a credit to the foreign currency bank account. The exchange rate to the home currency on the date of payment is on one line, and then the next line has the offsetting entry to the foreign accounts payable account and the exchange rate on the invoice date. And then the resulting gain or loss is posted according to the different exchange rates on date of invoice versus date of payment. A home currency vendor has no display of foreign currency, meaning it's a home currency transaction. And the net payable amount to the vendor is assumed to be the currency of the financial transaction itself, in this case US dollars, and the amount owed to the vendor is $4,400 US dollars. Now, in the event a home currency vendor does work on a foreign currency project, the line level detail shows the difference between the vendor's currency and the project currency. So in Canadian dollars, the net cost to the project is $62.42 after the exchange rate is applied, and this exchange rate is auto-populated by the date of the transaction, but it can be changed. And then here I've got a gross billable amount to the client after a 10% markup from cost. Now, to wrap up all the financial accounting for multi-currency realized gains and losses, there's a real nicely detailed report, which is going to have each receipt and cash payment transaction showing what there is as far as a final gain or loss after the effective exchange rate on the date of each payment. So these are all actuals that have been posted to the general ledger throughout the process of generating client invoices, entering vendor invoices, and then later applying payments to those invoices for monies coming in and going out, and the difference between the exchange rates on the date of invoice and date of payment. So the accounting for all of this is streamlined by the system setup where the defaulted general ledger accounts and tracking options are all set. And then all of this is run through with a complete audit trail for reporting purposes as well. Also, there's the aspect of reporting on unrealized gains and losses. And the unrealized gains and losses is based on open amounts of accounts payable and accounts receivable invoices. So this report is going to tell us what the value would be if all payments are satisfied on a certain date and or at a certain rate of exchange. Now, the exchange rate here is auto-populated by the date selected because the system is pulling those down daily. But the rates here can be changed for reporting purposes, in essence allowing those open amounts to be revalued to whatever the exchange rate is that's set in the report parameters. So with that, then all the bases are covered for a very systematic approach to using multi-currency in Workamajig. And that's pretty much a wrap up. So thanks for watching. Thanks for your interest. Please feel free to let your account manager know if there are any questions or if you need additional information on this topic. Thank you again.